The Young Turks 14 years.
Welcome back to Young Turks. You're watching our special presentation from Let's Ignite 2016. Now, 2015 was a watershed year for startups. While the first half saw high valuations, the second half made investors pause and think. And this is what we analyzed with a panel that featured Global VCs. Paper unicorns, valuation bubbles and impending IPOs. Here's an excerpt of what 2016 holds for us. How much of a self-feeding cycle we are in right now, or is it time for some corrections? Manish, let me start with you.
So if you look at 14 and 15, I mean, if you really dig deep, money really didn't go beyond the 3 or 4 verticals.
Yeah.
While I'll say the market is going to be a lot more sane, you'll also see a market developing in the sense of being getting deeper. You'll see a lot more realism in terms of real problems getting solved and focus on different kind of metrics that investors look at.
Ramesh, what do you feel? What was the reason? Was it just investing without thinking? Was it lack of due diligence? Because, like he mentioned, 90% of the money in 2015 just went to a few dozen of companies.
What also happened in 2015 was there was a crowding out of the angel space by corporate ventures. VCs getting into the micro VC space. So effectively, valuations were getting
everyone was turning out to be a VC.
Exactly. Okay. And now I think the situation is much more reasonable. Yes, even if you're an angel and if you're looking at an asset allocation perspective, in terms of how much capital you're willing to spend, you probably are worried a bit because if you look at last year, if you look at the BRIC countries, Brazil is dead, Russia is dead, China we don't know where it is, and India is the last man standing. So if you have angels who invest cross-border, they are looking at much more an asset allocation perspective. They're happy that valuations have come down in India, they like the story. But I think this year will be, capital raising is not a success story. What you do with your business is a success story.
But is it time to get real or go home for Indian startups? They have money in the bank, but they are far from profitability, especially the e-commerce ventures. Manish, let me get you in here.
I think the macro sentiment, again, because the market is not deep, it will have an impact and therefore gives startups also an opportunity to ponder on, the ones that have cash. It's great to have that cash, so you're going to make sure it runs longer. And you will focus on, a startup that raised $10 million, let's say 6 months ago, will also think differently than they were thinking 6 months ago. So absolutely, these are opportunities to, hunker in and look at, how you're spending your money. And in environments like these, supply chain side, the resources also become cheaper.
Yeah.
So you can also look at your cost in a bit different way.
Hero, coming to you, what are some of the global economic trends that we'll see in 2016 and how those can be applied to India?
Each country, for example, as he mentioned, like China a little bit turmoil, but the bunch of the money sits in Chinese market still, and then smart Chinese people try to go abroad to search for the more rational and more ROI, return on investment. So
they look to the next China, which they feel is India.
India.
But
so,
is it?
Yeah, and then also so the little bit. Not so good situation, maybe a little bit, valuations going down. Actually, real competition begins this year. So I think good and bad things happen, but so far, I'm pretty sure that this year more challenge, but there's more opportunities, diversified, and more global player come.
All right, so there are more opportunities this year.
Yeah, yes.
Melody, let me get you in here. You feel the macroeconomic situation has its impact, but it does not impact the angel investment. Your comments on that?
Money that the early stage companies needed is not a lot. So if the early stage companies were focusing too much time on raising money, on achieving getting higher valuation, and we don't think they're focusing on the right things. So we want to find and fund the companies that are focusing on building products in whatever market situation. They should be frugal, they should be achieving market fit and product fit as soon as they can. They should be very creative, they should be nimble and agile in whatever market they're operating in. So I don't think it's a huge impact on the good companies which should be getting funded, and it's a good flush out of the system. The companies are focusing on the wrong things, should get flushed out.
If you're investing in the next, 10th or the 12th super hyper-local restaurant discovery platform in Bangalore, yes, those kind of companies will start to see some struggle. But there is still $5 to $10 billion of different estimates of dry powder in early stage VC in India. I mean, I'm not actually sure if the valuations have come down across the board. What I'm saying is that a lot of other companies that were otherwise not being noticed will start to get noticed. I mean, maybe an agri-services company that's playing on this $250 billion market in India that otherwise was not cool a year ago or 2 years ago will suddenly get a little bit of attention from investors.
The Young Turks 40 years